This is Rumble on the monthly chart, and Rumble really hasn't made a lot of news or noise. As you can see, price for the last several months has been range bound. The most recent range bound has been between $6.50 and this $10 to $11 level. We'll say at $10.50. However, the most recent leg in direction has been down. Again, within a sideways price action environment. So what's going to cause the stock to break out of this range? Not sure, but let's look at the latest news to get clues. So shares of SoFi stock are in the red at the Mizuho. Analysts, a prominent bull in the company, lowered his price target to $12 from $15 while maintaining its buy rating. Now, this particular analyst, Dan Doleve, mentioned SoFi as one of his top 5 picks for this year. His analysis of SoFi balance sheet shows ample capacity to originate personal and student loans for 5 to 6 quarters, even without selling loans. He also estimated that the company will be able to add between 750 and 800 million in incremental lending capacity for each $100 million of GAAP net income it generates. Now, the valuation of SoFi has remained a problem for the company, as many argue that the stock should be valued as a bank. So SoFi is in that fintech arena, that along with the Blocks of the world, the PayPals of the world. Now, banks have historically commanded lower valuation multiples, although the counter argument is that SoFi is growing at a much higher pace than traditional banks. At least 3 other financial firms have adjusted their SoFi stock price target this year. That includes Barclays, who raised the target to $10 from $8 while maintaining an equal weight rating. Furthermore, Deutsche Bank initiated coverage of the stock with a hold rating and a target of $11. While Keefe, Bruyette, and Woods downgraded shares to underperform from market perform and lowered its price target to $6.50 from $7.50. Now, for the quarter, analysts are expecting $572 million in revenue, signaling yearly growth of 29%. Further, the company is expected to break even with a GAAP EPS of 0 cents, its highest quarterly EPS ever. Now, GAAP EPS is expected to become positive during the second quarter of 2024 and remain there. Now, going back to the weekly chart, you can see how the moving averages are flat. Again, confirming that you have been in this sideways environment since July, technically. And typically in the middle, you don't really want to place any trades. You'd rather place them at the extremes, meaning sell at $10, buy at $6.50. Let's take it down to the daily chart. And you can see price is hovering right above the 200-day moving average. But you do have a convergence between the 100-day moving average, the 50-day moving average in red, 100 in white. You have your momentum moving averages starting to point down. You have the crossover between the 13 and the 26 daily simple moving average. So it's not really any trade setup opportunities. Again, you need to really wait for price to move lower. Again, that was the origin of the move higher to $10. Thanks for watching. Subscribe. Please like the video.